This is the Dogecoin 1-year overview reading for the year of 2024. It's currently November 14th, 2023, 2:27 p.m. Eastern Time. Dogecoin at the time of this reading is just over 7 cents USD at 0.07118. And the shuffle video for the Dogecoin 2024 reading was created on June 27, 2023 at 7:25 p.m. Eastern Time. That's this video right here in the corner. So the overall theme and behavior for Doge in 2024 is very mixed. The prudence card as a theme card indicates quite a lot of like tricky back and forth chart behavior. When you see it in a high or a low position, it more indicates like multiple false highs, tops or bottoms. But in a case like this, it's more like sudden reversals almost. And then it's crossed with out of a notable decline to a prominent trough on a 1-year chart scale. We have a big move out of that decline from the bottom of a range all the way to the top of a range. Again, that's an important range. Not necessarily like the range for the entire year, but on a 1-year chart, that range would stand out pretty prominently. We have the Sorrow card as the highest high indicator, and I think in the case of what's going on here, we likely have 3 highest highs. We either have 3 highest highs or we have 1 and a couple of like minor highs, but I think we probably have 3 highest highs and then a significant drop off of that 3rd high. Behavior around the lows, we have notable reversals that'll stand out on a 1-year chart. The reversal will really be prominent, and I think there's probably more than one lowest low as well. And before we go any further though, I just want to make sure everybody's aware the whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We're giving away most of this information away for free. It took a lifetime to figure it out, and the whole reason is that people who are utilizing this information for profit to trade with need to be sending 5% of those profits forward to one of these charities here on the resources tab of our website, Tarot for Traders. Right here, just click here and donate. And then 5% of the profit should go back to the channel as a thank you and to maintain abundance mentality. You can use one of these links here if you're international, use Wise, or you can tip through YouTube. YouTube takes 30%, but you know, whatever you got to do. And that leaves you at 90%. That's way more than a stockbroker would leave you with. Make sure to spend that money out of love. As long as you follow those rules, my friends, the universe considers you an angel investor in the channel. It's going to send it back to you tenfold through this channel, my friends. Neglect to follow the rule of karma, my friends. Those rules, the universe is going to shut off the flow of abundance through this channel to you. It will happen fast, my friends, so don't hesitate. Follow the rule. That's the whole purpose of the channel. It's the whole reason why the universe is allowing this information to be utilized for gain, because it's not all personal gain. Let's get back into it. So the important thing about a 1-year chart is that you got to understand the 1-year charts. These cards going across each cluster of 4 cards represents 1 month out of the year. All right, so we have January, February, March, and the cards in the middle of each cluster, the 2 going across. These are what we call timeline cards. Each one represents about 2 weeks of time out of the year. But the thing is not each card's energy is going to line up perfectly with two weeks of time. So you have to give it plus or minus 2 weeks of time in some cases. In most cases, the time is going to be right on point. In some cases, in some readings, it's on point the entire time. In the majority of them, it's like that. But in some cases, the timing will deviate a little bit because again, not each card's energy lines up perfectly with 2 weeks of time. In cases where it does deviate, it'll still follow the sequence of events as predicted. So it's really important to just follow the sequence of events. When you find the timing a little bit off, to stay on track, just make sure you follow the sequence of events. And so we're going to get into the highs and the lows, as well as the week-by-week chart behavior in just a sec. But let's take a look and see how we're doing for the 2023 reading. This is looking pretty solid, guys. So this was done, the 2023 reading was done all the way back on December 16th of 2022. So, I mean, it's almost 2024 now, you know? Like, that was a long time ago. I've done so many 1 years since then. I've gotten way better. And so I can see there's things that I missed here. Like this arrow pointing here is pointing out a highest high. And you can see here, we have a highest high kind of like on the edge of March, April, but I missed that one. In any case, what I do have is a highest high here. If you cut out these 2 spikes out of nowhere, we've got a highest high here. So January highest high, we go into a notable trough in the March area. Matter of fact, in February, there's a rally into a February high that offers opportunity to open up a short position. Then we go into a notable trough out of a decline from the bottom of a range all the way to the top of a range. That's the strength card. We go up. That's from March into April, and the move to the upside in April offers an opportunity again to open up a short position before a notable decline on a 1-year chart scale. So this is looking pretty solid, guys. We have a prominent trough in June. You can see prominent trough in June, and we have a lowest low in September. You can see that spike in August to September, again, plus or minus 2 weeks of wiggle room, and then an even lower low here in October. And you can see we nailed that lowest low there. That's the lowest low for the year there in October, and then we should go back into highs, and you can see we're already in the process of doing that. Very likely we have a highest high at the end of the year here with a breakout. So that's looking really solid, guys. And anybody that had the paid version knew to trade here in February, they knew to trade here in April to open up short positions in both cases there, right? They knew to open up a long position down here. I mean, that accuracy only comes from ESO meta analysis. All right, so let's get into it, guys. So in early January, in the first couple of weeks of January, we have a failed attempt to break through key resistance, followed by a decline through key support, and that'll be resistance and support on a 1-year chart scale relevancy. What's important about that resistance is that it's going to, like chart behavior prior to this test at resistance, chart behavior would indicate that we're going to break through that resistance. So it becomes a disappointment. We end up turning around and declining because everybody was expecting us to break through the January high early in the year. And you can see on the January, which I already did, the January 1-month reading's already been done. There's cross-reading congruencies there where we have a high appearance here. The 2 of Swords appears here in early January, which is also correlating to a high. There's an important trough in January low, and then an unexpected move to the upside in the end of January, taking us into probably the same highs in early February. A lot of price change covered. This orange indicates one of those locations where we need to be cautious. The orange indicates correlations to the prudence card, so we want to be cautious around early February, and there's a lot of volatility in early February. That volatility ends with a fast sudden move higher, taking us to a high again, but that's also after probably our lowest low thus far, the same low that we had in January. We'll probably see it again here in February. And the thing about the death card is the death card is often a lowest low. It may not always be. In a case where it's really close to highest highs, it's possible it's not, but I'm getting some indications of lowest low behavior going on here. So at least like lowest low thus far here in the middle of two highs here in February, we have a lowest low. I'm advised not to chase that rally in late February. There's an important resistance level that's highlighted, and it's probably the same resistance that was highlighted at the high of January. Interesting. So it's like there's three pokes through the same price level here in January, February-ish, maybe the edge of March. Three pokes through the same price level at those highs, and then a sharp drop off of that third poke into a, we'll most likely see it again. And that's also the yellow correlation here is to the strength card, which is a big move from the bottom of a range to the top of a range starting out of a decline. So that's likely what happens in early March, is we have this fast sudden move higher out of a low, taking us back to revisit a high in the midst of some erratic behavior. We'll revisit a crest for the March high. That crest was recently a past opportunity, so maybe in February. And then behavior around the lows of March, we have sideways rotation establishing support. That's also another location where we want to be cautious near the lows of March, as indicated by the orange. And then there's a big move standing out on a one-year chart out of that sideways rotation establishing support. After that big move higher, we have more sideways rotation establishing support at a higher price level. So that's the behavior we'll see out of the low. And then in late March, it looks like we're bumping along key resistance. There'll be a couple of prominent peaks that stand out here in late March. Bumping through resistance. The second one might be slightly higher than the first. Yeah, a lot of erratic behavior in March. Like we probably see 3 notable peaks and 2 notable troughs in March. And our first notable trade opportunity takes place there in March as well. I'm going to talk about that in the paid version. We'll talk about what to look for in chart behavior as far as entry and exit points for the trades, and backups in case the information ends up being wrong at some point, what to do in case we're wrong about the trade. We usually look for multiple exits in case we're wrong about one. There should be some backups. So I think what we do after those 3 pokes is we start to decline pretty notably here. In early April, though, we have out of a prominent trough, we have sideways rotation and then a big move higher. And I'm advised to be cautious there with that prudence correlation there in the midst of that big move higher. The high of April is within close time proximity to a lowest low of the year. So I think probably early April is going to be a lowest low. And there's a lot of caution advised around the high, which also is like from the bottom of the range to the top of the range to meet the high. And then the behavior around April high, we have this prominent move higher followed by a full retracement with the move back down. That's on like a multi-day scale. Sideways fluidity, equal amounts of bulls and bears. So back and forth behavior going on in late April, and again a correlation to the prudence card. We want to be cautious there. Behavior around the April low, we have a crest that we sell off from down 2 and through support to meet a second support. We do a U-shape reversal below that support, come back and reuse it as support. A sideways fluctuating decline in early May. It looks like from a prominent peak in early May, like on the cusp of April-May prominent peak. And that's with the sideways fluctuating decline. Looks like the high is probably early May, sideways fluctuating decline into a trough or a low for the May low here around like the 3rd week of May, most likely. Big move to the downside in the 2nd week of May, big move to the upside out of that trough in the 3rd week of May. But I don't think that move to the upside takes us to a higher price level in May than we had seen early in May that then declined from. However, there's a couple notable trade opportunities in there. And then we have some price swinging going on in early June. A prominent move to the upside, breaking through resistance to create a June high, not a highest high, but a June high, a month's high. It's followed by a full retracement of that move back down through that same price level. So we break through it, we stay above it briefly, break back down, making like a capital A in the English language, if that price level was the horizontal line through the upside down V. We have a U-shaped dip near the June lows, that it forms near the intersection of 2 perpendicular diagonal trend lines. And then the later part of June, which looks like is probably where the June low lies, we decline 2 and through support to meet a second support. That's on a multi-day scale or a 1-year chart relevancy scale, and then we rotate sideways along that second support into July, somewhere around that at the end of June, July, and that sideways rotation that turns into a rally into July to a July high. So there's a pretty notable rally in there in July. It's hard to tell if it's just straight rally through July or if there's like some mixed, like some decline in the middle of July followed by more rally in late July, like rally, decline, rally. Hard to say if that happens or if it's just straight rally into late July. But either way, there's a big rally standing out on a 1-year chart into the July high. The rally into that July high will meet key resistance and it'll offer an opportunity. Okay, so from that resistance, we decline with consecutively lower spikes up on the way down off of that resistance. That decline takes us into August, and it'll be a decline through multiple supports based on the July low correlator card. So when we meet that resistance somewhere in July, we decline from there, and we probably see the low of July later in July, like the end of July or on the cusp of July, August. Out of that decline, though, there's a big move from the bottom of the range all the way to the top of a range. Unexpected, maybe even like a gap up. It'll really stand out on a 1-year chart in early August, and it'll create a brief peak that's easily missed. Either the same highest high that we had early in the year, or just a prominent high, but yeah, on a 1-year chart. But I think it's probably the same high. And so we meet that high. It's a brief peak that's easily missed, followed by a notable decline, like a full retracement of that move back down into lowest lows. And if there's a location, if there's only one lowest low and all these other lowest lows are just prominent lows, the lowest low is most likely going to be here in August. But I think it's probably a similar lowest low. Like based on the prudence card, we're probably going back and forth with a lot of reversals going on. In any case, there's a big move out of that lowest low from the bottom of a range there, and there's an important range on like a 1-year chart at minimum here at the low that's highlighted in like late August. Big move out of that low from the bottom of the range to the top of the range based on that yellow correlation. and kind of like mixed, but taking us back into another highest high there in September. So probably the same high we saw in August is most likely we see it again here in September. It's an overbought peak. Early September is mixed, volatility near the high, a sharp drop off of the high, and in late September we have selling off from a overbought peak. I think there's a pretty significant decline there around the end of September into October, hard to say, but possibly another lowest low visit in there in October. Either way, pretty big decline off of the highs there in September, October, and the unicursal would indicate that as well. There's a resistance that we've met many times before and failed to break through that's highlighted in early October, and the decline from the October high takes us to revisit an important support level that was recently a past opportunity. Important price level near the October low, and that's important on a multi-year chart scale. Most likely a lowest low there again, and then out of that lowest low we have a big move from the bottom of range, a big move out of that lowest low, possibly pushing the upper end of the range higher. We most likely revisit highest highs there in November. It's either that or that we're seeing a higher price level, which I find unlikely, but it is possible. The cards could be saying that. I think they're probably just saying we revisit the highs again there, and we attempt to establish support in early November. Matter of fact, there's quite a bit of trading opportunity in July on a multi-day swing trade kind of indication. It's highlighted. It relates to here in October, November most likely. We attempt to establish support, and it looks like we attempt to establish support around the cusp of October, November, near those lows. We attempt to establish support, and then there's a big move higher into a possible highest high in early November, followed by a sharp decline like the second week of November, followed by a big move to reach either the same high or a higher price level in the third week of November, and we decline from in the fourth week of November into an important support level again in early December. A lot of price change in early December. That Ace of Discs indicates an opportunity to trade both directions most likely, but it indicates an opportunity to cash out of a position. Also, if you combine that Ace of Discs with the Princess of Discs, it's a pretty significant opportunity on a multi-year scale. We have sideways rotation near the December high and a sudden move higher ending that sideways rotation. Failed attempt to break through key resistance in late December, followed by a decline through key support, and a decline creating multiple new resistance levels on the way down into the December trough. Sneak preview for 2025 is a notable decline, like a failure on a one-year chart scale minimum. So that should really stand out there. Doesn't mean that there isn't bullish behavior going on. In order to see that, I have to do a 2025. But that's the Dogecoin for 2024. Let me know what you think by hitting that like button. As always, make sure to follow that rule of karma. It's super important that you do that if you plan to profit from this information regularly, and you plan to continue to profit from it. You must follow that rule of karma. The universe will shut you off on this channel. With all that said, stay tuned if you got the paid version. We're going to talk about the price levels and the best trades that we see. Thanks for watching, guys. I'll see you on the next one.